Good afternoon and welcome to the latest Equifax Fraud Trends webinar. My name is Carl Davis. I lead the fraud and identity teams here at Equifax Canada. I'm grateful to be sharing the session today with some Equifax colleagues, and so I'd like to spend a moment to introduce them. With me today, we have Julie Kuzmic, our Director of Consumer Advocacy at Equifax Canada, Adam Gunther, Senior Vice President, Equifax Global Fraud and Identity, and Mike Urban, Vice President of Trusted Identity Services Consulting at Equifax. Julie, Adam, Mike, welcome, and thanks for taking the time out of your schedules to be with us today. A few housekeeping items before we get started. Our presentation will show in the middle of your screen, and there is a contact information that can be found at the right-hand side. Today's presentation will also be available for download in the resource widget on the left-hand side of your screen. A French translation of the PDF will be made available shortly. Also on the left, you'll see a Q&A widget where you can add any questions you may have during the webinar, and we very much welcome questions. We'll try to answer as many as possible at the end of the session today, but if we do not get to your questions, we'll generate an FAQ document, which we will send out as soon as available. Finally, we have a short survey, which I will ask everybody to fill out at the end of the session. It should automatically pop up at the end of the webinar. If you'd prefer to complete the survey at a later time, you can access it by clicking on the survey icon at the bottom of your screen. There you'll also find some other icons that allow you to navigate around the platform. Today's session will review the fraud trends that we observed throughout 2020, but with a key focus on Q4. The analysis here is driven from our Citadel fraud prevention platform, which processes around 20 million applications each year as part of our clients' fraud mitigation program. So great insights we'll be able to look at. We're also going to spend some time today looking at the changing consumer sentiment measured during the pandemic period to gain some insight on what our clients are thinking and feeling. We'll finish up our time today with a panel discussion. And given the depth of expertise we have with our guests, it promises to be an insightful session. During our last session, we made some assumptions about what the landscape may look like in the months ahead. We all agreed that fraudsters don't take a break when uncertain times are upon us, in fact, quite the opposite. And so a lot was going to be defined by how the COVID pandemic was going to manifest itself during the last quarter of 2020. Of course, that's the same time period we typically see some of the highest rates of online transactions given the holiday season, therefore driving higher rates of fraud in the process. So our predictions that we had not yet seen the full impact of fraud from the COVID-19 pandemic were centered on a few reasons, two of which really stood out for me. Firstly, social assistance programs. We've seen many examples where such programs become a target for fraudsters, not just during COVID. There were some similar events we saw during the Fort Mac fires. We saw signs of that in Canada during the initial wave of the pandemic, and the belief was that the response of our government to any subsequent waves was likely to impact how and where fraudsters were going to deploy their efforts. Secondly, and maybe more impactful to my mind, was the accelerated move to digital channels. Digital acquisition channels, especially those deployed in haste in response to the pandemic, are a playground for fraudsters. During the pandemic, those channels were the only connection that businesses had to their consumers, so they truly were critical to survival. Associated with that, I think there's also an age component. Digital-only services are likely to be less effective for older age groups. Millennials are super comfortable ordering avocado toast deliveries from their smartwatch, but senior members of our population may be less comfortable or not have the right services or knowledge to be effective in that new normal, therefore putting them at a higher risk. There were many variables at play in 2020. I guess you could argue maybe even more so than ever before. And so we'd like to start unpacking some of the data that Equifax Canada has been able to collate to try and figure out what happened. I'd like to start us off with a question. I promise we don't have too many polls included in today's sessions, but they were super insightful last time, so we included just a few. So our first question, how do you see digital channel usage changing in the next 12 months? I'll give everybody just a few moments to respond. Okay, so fairly unanimous in our responses there, significant increase. Not sure if there are a few more responses to come in, but we'll assess that. And I tend to agree. One of the things I think we'll see going forward in the pandemic is that increase in digital usage is not purely in response to the pandemic. I think that is truly going to be our new normal. So I think our digital channel usage increase is here to stay. I wanted to revisit the credit demand chart we looked at last time, as I think it sets some good context around our full data points. The chart you can see right now shows just that. It's indexed to the first week of March. And we can clearly see that impact of the first wave. There was a sharp drop in demand for credit in March, hitting a low in April, about 51% drop year over year. That was followed by a gradual recovery in volume through Q3. Q4 numbers, we can actually see that demand volume tracked very closely to 2019 throughout Q4, indicating that we are potentially starting that road to recovery. What's not presented on this chart are any potential impacts we saw to some of the lockdowns that happened toward the end of December and then into 2021. I think we certainly will see some impact to demand during that early part of 21, although I'm not sure I would expect it to be as pronounced as the 2020 Q1 contraction that we can see here. So let's move into some of the 4 data points and look at some of those headline numbers. So the chart we see here shows application volume and fraud rates across 2019 and 2020. It's quite a busy chart. I apologize for that. The 2020 numbers are shown on the black lines. They indicate fraud rates. The red columns are indicating application volumes. This chart shows us fraud across all industries and all types. And I guess what strikes me here is that there's almost 2 different stories going on in 2020. We saw the initial spike in Q1 and Q2 driven by, moderately increasing fraud, but a significant drop in application volume. Not an ideal situation as the proportional impact of fraud losses to your business increase. However, from May, the rates of fraud begin to drop, and by the time we get to July, we're at a level that remains stable right through to November. And we see a spike happening in December. We'll talk a little bit about that in some of the future slides. That similar trend can actually be seen with application volume, not just fraud rates. So the levels are quite volatile in the early part of 20, but stable in the second half of the year. Volume is actually consistently below 2019 levels, which actually aligns to the reduction in credit demand and slow recovery before getting back to some of those normalized Q4 levels. I'd suggest that both 2019 and 2020 levels don't show the typical seasonal spike in volume that we see. 2019 was muted and 2020 remained quite flat, likely subdued due to negative consumer sentiment and the economic impacts of COVID. So interesting numbers here, but I think we need to look a little deeper to find the real story. The reason codes that we apply to suspicious applications, I find, always provide some good insights into the types of fraudulent behavior that are happening. And we can see on the table here that true identity fraud has been prevalent in 2020. True ID fraud happens when someone completely takes over your identity and begins to open accounts in your name, the type of behavior people most commonly associate with ID theft. This type of fraud is usually one of the top behaviors we'll see, but notable in 2020 is that it accounted for just over 40% of all reason codes attached to high-risk transactions. There's some other interesting details we can gather here too. The chart on the right-hand side shows the percentage contribution of the reason code total by quarter. So all things being equal, one could estimate that for each quarter, any particular reason code should contribute about 25% of its annual total. If we look at true ID fraud, we can kind of validate that assumption. There's a slight dip in Q3 for a higher showing in Q1. I do apologize. I realize the legend is a little fuzzy there. If you look, however, at the purple column in Q4, this is showing suspicious email. The reason code actually didn't break into the top 5 reason codes along the full year, but in Q4, its usage spiked. It accounted in Q4 for 45% of all suspicious email instances across the entirety of 2020. So a real focus on that reason in Q4. Suspicious IPs also contributed higher than expected volumes in Q3 and Q4 compared to expected levels. 67% of those instances occurred in the second half of 2020 compared to much lower quarterly instances in the early part of the year. This lends itself to the general sort of identity theft, potential account takeover approaches that are used by fraudsters. There's nothing new with this, but I think there was an underlying driver behind the focused efforts we saw in Q4 from the fraudsters. Now let's review fraud trends against the Equifax ERS risk bands to highlight any trends. Again, these numbers are indexed this time to October 2019. The 601 to 660 risk band was the most impacted by fraud in the early part of the pandemic. But in the months that followed, risk bands all took a similar trend and actually ended the year in rank order. So 800 plus showing the smallest change from the index point and 600 or less sitting at the bottom. What's notable here for me in this graph, however, is that spike we see in October is very ordered. Everything is moving in unison across all risk bands. So generally, when we see a trend, it will impact all risk bands, but the impact is a little bit more messy. You see kind of lines changing because they're impacted in different ways. You don't see the uniformity in change that we see here in October. So there's some possible explanations for this, and we'll get to that as we move down the industry charts. The differentiation between first and third-party fraud helps us understand the how and the what, but it also provides us some insights into the behaviors that drive fraud. So the chart on screen now simply shows the total fraud rates across all industries, but it's separated between first-party and third-party fraud. First-party is the gray columns, third-party are the red columns. Now, we noted previously that the spike we saw in April was likely attributable to a cluster of fraud activity intended to defraud the Canadian CERB program. Now, once that program was exhausted, we can exceed the expected contraction of fraud in line or back to seasonality, but I find it notable that third-party trends fall significantly faster than third-party in that time. That remains true until October, when third-party fraud exploded, a massive 144% increase in third-party from September to October alone. Now, such changes typically aren't without some kind of compelling event that drive fraudsters to act and act fast. So that event, well, once again, I think it's the availability of social assistance programs. The CERB benefit program ended in September, but given the continued hardship faced by so many Canadians, there had to be some continuation of support. That CERB program, after it ended, was replaced by our existing employment insurance benefits. This provided a new attack target for criminals to use the many real or synthetic identities they had at their disposal, identities that they probably already used for some unlawful CERB applications. They now became viable and useful for fraudsters to be able to extract additional value. The data that we've looked at to this point has been consortium-wide, but now let's take a quick glance at some of the fraud metrics separated by industry in an attempt to look at where those attacks centered. With such a drastic increase in third-party fraud and aligned to the benefits fraud, we should be able to find further evidence to support. Today, I wanted to focus on just a few segments, as I believe they hold some good insights into criminal activity during the pandemic. Specifically, we'll focus on the banking and card segments because I believe they provide some of those interesting viewpoints. But firstly, I'd like to check out the mortgage sector, as there were some interesting trends that came to light recently. If anybody watches the housing market, you'll know we're in fairly heady times. Extremely low interest rates, limited inventory, all make for a heated market with house prices growing significantly. And as such, volume changes throughout 2020 remained relatively strong and were up over 2019 volumes, further pointing to that buoyant market during the pandemic. Fraud rates remained relatively stable in this sector throughout most of 2020, but Q4, as you can see on the graph, showed some material increase. Now, the interesting point here is a large portion of that increase, that trend, was seen in the 65 plus age range with high ERS scores. That's super interesting. That's not the typical thing we'd expect. Fraud rates in Q4 for 65 plus were 1.13% compared to 0.4% in Q3. So material growth. Actually, all segments showed notable increases in fraud rates against mortgage in Q4, but none quite as high as that 65 plus population. So again, super interesting situation. Lots of theories about why. Certainly I think ID theft are often targeted at seniors, but obviously the approach to mortgage there is interesting. Let's move on to cards. So the card space normally provides us with some really good intelligence around the fraud behavior patterns. But the interesting story here is actually, there's not a real story at all, or certainly not in the second half of 2020. We have a very stable and growing application volume with an equally stable rate of fraud. If you look at fraud rates in 2020 compared to 19, they are higher, but the difference there is almost entirely attributable to volume changes. Not even the typical seasonality movements are visible here. So that's interesting, and the question is why? Well, let's take a peek at the next slide, the banking sector, which should provide us some information. Now, while I suspect everybody may have guessed what was coming on this chart, I'm still shocked by the scale of the growth in fraud that we see here. Earlier today, we talked about the rapid rise of third party that coincided with some of those social assistance programs. This industry is again where the rubber meets the road. From October 2020 to November 2020, the growth in fraud rates almost exclusively related to deposit account fraud was over 55%. Year over year, comparing November 2019 to November 2020, the growth was almost 63%. Deposit accounts were the hottest commodity during that time frame, just as they were earlier in the year. You needed a deposit account to claim your social assistance program, which everybody knew had limited fraud prevention in that process. So for fraudsters, this was open season for deposit accounts. And I actually think that can help us explain some of the other trends that we've seen as well. So for example, we talked about the very uniform growth in fraud rates across all ERS risk bands, which is atypical. Usually there is a little bit of stagger in there, but deposit account opening is not often dependent upon the risk score. And so that's one factor fraudsters don't have to worry about when looking at accounts. So, maybe that try everything approach was employed, which could have explained the uniformity of the change. The very flat trends in card fraud could also have a bearing. To hit the type of scale that we've seen here, to get fraud rates, as high as they are, takes a lot of resources. This was not your opportunistic fraudster, certainly not. The scope of this attack could not come without some cost. And so the belief here is that the typical preference for organized crime to focus on cards was likely temporarily held in favor of taking the low-risk, high-reward endeavor of benefit frauds, so potentially explaining why we saw some of that plateaued fraud rates in the card space. To illustrate the scale of the attack, I wanted to show this chart. This actually plots the month-over-month changes in volume and month-over-month changes in fraud rates. Now, the fraud rate number itself has an inverse relationship with volume. So volume is the denominator in the calculation. So even with stable absolute fraud numbers, the rate can increase if the volume drops. And we talked earlier about those scenarios. Not ideal because that means less applications are coming through your front door, but with the same amount of fraud. Now, if we look at the chart, we can actually see some examples of that inverse nature related to fraud. If you look at March and in November, you can see application volume dips, fraud rates increase. But let's look at that November example. Applications dropped by around 6% between October and November in the banking space. However, the rate of fraud increased by 44% in that same October to November period. That's a significantly disproportionate change in the fraud rate compared to the volume. So in my opinion, that tells us this is a clear sign of organized fraud taking advantage of the best opportunity that is presented to them at the time. This was a conscious choice to go after deposit accounts. Let's do another quick polling question, which you should see pop up on your screen. So question 2, where did your organization see the greatest fraud impact in Q4? I'll give you a few moments to respond. Okay, some interesting stats. So it seems that mortgage showed the greatest increase in Q4. Again, that kind of aligns to some of the data we have. We saw that spike in the mortgage sector in Q4. For us, at least, the data showed that it was focused around, the older age segments and those with higher risk scores, which might make sense in that mortgage space. Very interesting. Thank you. And so the question now, what do we expect going forward? So linking back to the point we made earlier about choice, I think choice is important as it gives us some context as to where fraud may move in the coming months. The increase in deposit account fraud is going to persist as long as it's lucrative for fraudsters. We know this. Once their cache of identities is run down, they're either going to try to leverage new ones. And recall, we saw the Q4 increase in suspicious email and suspicious IP addresses, potentially ways to leverage IDs. All fraudsters are going to need to focus their efforts elsewhere. Again, given the scale of the attack on the deposit accounts and their seemingly positive success rates, one thing we need to be mindful of is that there is and will continue to be a much higher number of active accounts in circulation that are controlled by fraudsters. So this can lead to many other types of fraud and ultimately higher potential losses for our business. So organizations need to be aware and prepared to mitigate this as much as possible. I actually think the one item we can all be fairly assured of is that the increased usage of digital channels is here to stay. I believe that's going to be a truly defining feature of our post-COVID economy. The increased levels of fraud we're seeing today are not actually in response to COVID itself, but in response to the significantly increased digital usage that COVID mandated. And therefore, increased digital usage and associated higher rates of fraud, that is our new normal. So for our next segment, we're very lucky to have our Director of Consumer Advocacy, Julie Kuzmic, here to guide us through some interesting insights that we've gathered on consumer sentiment towards fraud. So Julie, thanks for being with us today.
Pleasure to be here, Carl. Thank you. So Carl has walked us through what consumers have done over the last quarter of 2020. Now let's take a look at what consumers are thinking, especially now in March, which of course is Fraud Prevention Month here in Canada. We did our usual survey of consumers. This took place just a few weeks ago in earlier February. This was a cross-Canada poll, cross-demographic, in order to get a sense of where consumers' minds are at when it comes to fraud and potential vulnerabilities to fraud. So Carl was just talking about the increased use of digital services. Unsurprisingly, we had 80% of survey respondents indicate that they have adopted at least one new digital practice. And half of the people who responded to the survey have adopted 3 or more new digital services that they weren't using prior to the pandemic. So you can see some of the examples here. Unsurprisingly, there's more mobile contactless payments, more use of curbside pickup and in-store self-checkout options. And interestingly, some people are indicating making purchases directly from social media, which might be a newer activity. For some people. Now, what are people worried about when they think about fraud? What's coming to mind? We've seen an increase in the number of people who are feeling vulnerable to fraud. And interestingly, it's more weighted towards women. So we saw 80% of the female respondents saying they are feeling more vulnerable to online fraud this year than they were last year. Some of the areas of concerns that have increased since last year are around computer viruses or getting hacked in some way, phishing emails, and completing applications online using personal information, and then of course sharing on social media. We were a bit relieved to see the number has decreased of people who think that identity theft only happens to other people. So hopefully we'll continue to see this trend going down. So when it comes to activity changes, behavioral changes that people have taken on since the start of the pandemic, one of the bigger ones is that people are paying more attention to their credit card and bank statements, looking for signs of fraud, which is, it's good to hear that some of these basic, what we might call fraud prevention, basic hygiene activities, shredding documents, the types of things that we're always trying to remind people, although there's a lot going on digitally, that doesn't mean that you should leave behind some of those basics that are important to be carrying out. People are screening their calls more, changing online passwords, and then this one, checking credit reports more frequently. This one, of course, is near and dear to our hearts at Equifax, because this is something that is easy and free for everyone in Canada to do online to take a look at your own credit file and make sure there aren't any signs of potential fraud that may have taken place. So what are the expectations that Canadians have, not just of lenders, but of organizations in general? So 76% indicated that lenders could do a better job of protecting them. It's interesting to see that number so high, but 90% of the respondents actually feel that companies in general need to do a better job of protecting their information. And that number was 93% for people over 55 and 87% for people under 55. So a little more concern in the older age group, which may not be too surprising, but that might generate some thoughts around what organizations need to be doing in order to demonstrate to their customers. Maybe consumers don't realize some of the activities that are taking place in order to protect them from fraudulent activity. Also, 82% of the respondents felt that the government should penalize companies that don't have adequate security measures in place. So that one's a really interesting thought. I mean, there would be a lot of discussion around how do you define adequate security measures and what form would government penalty take. But an interesting thought exercise there. And what is really concerning people, obviously nobody wants to be a victim of fraud. And you can see that in this very high number of respondents saying, of course, there's at least one aspect of being a fraud victim that concerns me. The biggest one here is difficulty recovering my money. And that's not terribly surprising. Of course, there's a lot of hassle and difficulty that people associate with that activity. But some of these others are really interesting to take a look at. Having to prove that I am a victim of theft or fraud. And that one has increased from last year as well. So people are worried that they might be seen as the fraudster themselves rather than being a victim of fraud. And 37% of people indicating a concern around regaining confidence in financial institutions. Not too far behind that, 31% of people concerned about being flagged as suspicious and therefore having issues with future financial transactions. So some interesting thoughts around where consumers' minds are at as the use of digital channels increases and we continue through year 2 of our COVID situation. I'll pass back over to Carl now to proceed with the panel discussion. Carl.
Thanks, Julie. Always super interesting. I too, I'm always surprised by the statistic where people are concerned about having to prove that they're a victim of fraud. You know, for me, that always surprised me, and you know, I think it's one that we definitely all need to do better on. The other thing I found interesting in your presentation, Julie, was you know there were some undertones around age-related differences to concerns around fraud, and we've kind of seen that not presented today, but you know where millennials and younger generations are usually more comfortable, for example, storing information on social media that ordinarily would not be advisable. Certainly, we don't see that in kind of the older generations, but it's more prevalent in those younger demographics. So that's interesting. I'm super heartened by the fact that more people realize identity fraud could be targeted at them. I see that number coming down. I hope it continues to go that way, as it's quite the problem.
Indeed.
Thank you. So moving into our final segment, I'm thrilled to welcome Adam Gunther and Mike Urban to the mic, two esteemed colleagues from who I learn every day. So, gents, today you've heard me cover some of the trends in Canada and my interpretation of them, but I'd love to hear about some of the trends that we're seeing in other regions. So maybe, Mike, I can ask you the question first. Based on what you've shared today, are there similarities to the Canadian trends that you're observing in your U.S. business, and what part did digital acceleration play in those trends?
Yeah, thank you. I appreciate the opportunity to spend some time with you as well as everyone who's joined today. So I would say, kind of broad strokes, coming into 2020 and going through it, in the U.S., we were a little bit later to the chip and pin or EMV migration that took place. Canada was definitely multiple years ahead of us, but similar kind of pattern of behavior emerged, right? So criminals started moving from being able to, use mag stripes and go out and buy goods and fence them, and really starting to shift into new account opening and account takeover. And in the new account opening, all along we've been having growth of synthetic identities because it's much easier to use synthetic identities that you control, you can manipulate, you can clean, the bad trade lines that come onto them through, sort of the regulatory processes that are available to consumers. So it really allowed criminals to, hey, if I can't get the mag stripe, I'm just going to get a card, right, with the chip on it and a credit limit. And then moving into account takeover, right, where you can get into someone else's account, move the money out. And then, of course, the switch from point of sale fraud with card into card not present. So with that as kind of the backdrop, building up as we went into 2020, we saw a big shift. We continued to see synthetic identities grow, but we saw a big shift in third-party fraud or identity theft. And that, very similar to Canada, was directly influenced by the government bailout programs that were put together. So from people, setting up bogus businesses to get, loans, from, in particular, in unemployment. And, the estimates are anywhere from like 50 to over 100 billion in unemployment fraud, where the government agencies really weren't prepared for digital. They're very used to people going in and applying and kind of, a low level of applications coming in, and it just completely skyrocketed. And within that, we really saw, identity criminals go right to taking, the basic name, address, social, date of birth, data, static data, and using that to apply for programs and then changing the accounts where those programs were paying out. So that was pretty significant, what we saw there, really driven around that. And some of the technology, that we've been looking at and leveraging, to manage some of that fraud is really around account verification, right? Verifying that the identity and the bank account number go together, so that when a criminal who's sent in 50 claims of unemployment, all 50 of those are going to be different individuals, and they would have had to open up a mule bank account, with all of that information in order to have it match. So that's some of the ways that we've kind of looked at that from a technology perspective. And then also just in that sort of digital journey, right, they talk about, is it 3 or a 10-year leap, right, to get more and more people who might not have used a digital channel to suddenly start using those digital channels. And that's where looking at email, like you were pulling up there, IP address, phone, right, looking at those more digital aspects of identity that can get you past kind of the, analog static data, and that helps you on account opening. And then it also helps you in account takeover, because the way that we communicate with our customers, whether we're financial institutions or retailers, is through email. So if I want to get in and change a password, I can get in and change my email, have those links sent to me, have alerts about transactions sent to me. Same thing with the phone. So while the sort of static data doesn't change, those digital elements become critical at the point of application as well as to control account takeover.
Yeah, thanks, Mike. That's super interesting. Just touching on a couple of points. The business loans, we did. I don't have it in the presentation, but we did see an uptick in some business fraud, aligned to around about the same times that some of the commercial bailout programs were happening as well. Not to the scale of what we're seeing in the consumer space, but I think I think we can see a similar kind of trend in Canada too. Your point about digital is clear and very well made. We certainly need to look at those behavioral, almost I would call them the digital behavioral elements around identity to make sure that we're doing it. And I think our acquisition of Count recently, I think, is really going to help us drive into the next level as we think about that. So Adam, I guess a nice segue into technology and product, which is your area. So as a leader in our global fraud and ID team, you're exposed to global trends such as the ones Mike and I just mentioned. How is the technology innovation that you're seeing being driven by the trends that we see and the trends that we expect?
Yeah, it's a great question. I'm a technologist and an innovator at heart, so you get me going on this topic, I don't stop. And in my role globally, I get to see what really are common trends. We have opposing pressures, right? On one hand, we are all getting pressured as businesses to have more digital experiences, better consumer experiences. COVID, I think, has only accelerated that, but it's not new. And at the other end, the more digital we'll become, right? We're trying to combat fraud and protect our businesses. So as we have less face-to-face interactions, how do we do that? And I think that's what's driving the innovation. It's the need to do both. It's not an either or. And contrary to belief, it's not a required trade-off. Some of the new technology is helping us to do both of those, where we can offer an easier, better digital experience while having it be more secure and reducing fraud. So let's talk about a digital transaction. For a moment. There's really 3 steps to making that happen at the risk of oversimplifying. First, if I come to your business, the first thing you want to figure out is that actually Adam on the other end of the device. Like, is Adam a real person, and is that Adam? Second, and we often forget about this, just as much as I want to understand the consumer at the other end, the consumer wants to know that I'm really that business. There's so much that happens in the way of phishing. And that's honestly how we have a large percentage of IDs that get compromised, how fraud that occurs, is people that are able to phish things out of users. And so how do we combat it against phishing is just as important as the identity verification and authentication. Once we do those 2 things, even if we've established each other's identities, the business wants to know, am I trustworthy to do business with? And do I have their consent to do business? We have to think about, privacy regulation and all of this. So, in terms of trends around the world, I think this is where Canada is actually ahead of the market. And we've been partnering with a company called SecureKey and are proud to participate in the Verified Me network in Canada. So I think many of the people listening into this call may be participating in that. Some of Canada's largest banks are in that network, as well as a number of other participants. So how does this solution work, and how are we solving for this with technology? Well, let's take those 3 steps. First, is Adam real? So through the method of how Verified Me works, we can actually combine identity information from multiple sources. We can combine what the banks may do with KYC to onboard you with, let's say, what what we offer in our identity and fraud portfolio to help do things like protect against, synthetic ID, amongst other things. And there's an ecosystem of data providers where the consumer can consent to have information shared with you to help build up your knowledge base of, is this a suspicious person? And there's new technology that may even enable us to say things like, is that your phone? Is that your device? And what's important about that is that the network is a decentralized experience in that all of these providers are providing information separately on your behalf. So it's not one party in the middle that is feeding in all of your information, which is bad on many, many levels, and just becomes honestly a big attack vector or a big honeypot for fraudsters. And instead, we can do this in a decentralized way. So as a hacker, to compromise that system, if I may have to break into like 7 different ecosystems or break 7 different companies' identity and fraud protection systems. So individually, no system is perfect, but collectively, when we bring our identity and fraud systems together, what can that do to protect us all as businesses? On the phishing side, the Verified Me experience, whether it's in an application or in a browser, it's a controlled experience. It's not an experience that anybody can plug into, and that governance helps us establish that the businesses are who they say they are and gives me as a consumer confidence that I'm actually doing business with who I think I am. It's not even like my email inbox, which anybody can send me an email, and then I've got to figure out, is it real or not? Having that check on the business side is something we don't think about, which is value add that we're doing. Then third, how do we then actually achieve the transaction, achieve this trusted exchange of data? And this is where technology comes in. So all of this decentralization is powered by blockchain technology, amongst other things. Now, I can't see everybody if we were together in a room in person. I would wager half the audience cringes when they hear the word blockchain. And I think that's because we associate blockchain with Bitcoin. We associate blockchain with what we hear about, these anonymous systems that are anything but like the exact opposite of what we want to do to protect identity and fraud. This is different. Blockchain is two things. It's the actual technology, a distributed ledger. So I can record a transaction in multiple places and we have confidence that it's real. Second, it's the governance model of how we do that. And there are open governance models, which is how Bitcoin works. If you see an identity system using that, it's not going to work for any type of real business transaction. How the verified me network works is it's private governance. It's a private consortium. I'd encourage you to read up on that. But that's how, not just in Canada, but we're seeing trends around the globe of innovative companies taking advantage of technology like private blockchains to achieve decentralization for business purposes. And that allows us to achieve things like not just this decentralization, but to do it in a way that's what we call triple blinded. So as a consumer, if I'm permissioning data from Equifax to my bank, I'm the only one that understands the full view of what's going on. I'm able to control, so I'm sharing just what's needed. It's helping to reduce the spread of information. It helps businesses have regulatory compliance. The businesses don't know where the data is going. They can't see that. The network doesn't know. The encryption technology enables this privacy exchange. Just like today, if I take my driver's license and I show it to a bank in person for purposes of identification, the government is not able to track that. And now with new technology innovations, we're actually able to do things like this digitally. We've got it live in production in Canada. It's not just Equifax, there's other parties participating as well, and we really were inviting the world there to participate with us. So, I share that, Carl, just as an example of, where new technology is not just science fiction, but we're using it today to provide both a better digital experience while reducing fraud and providing better identity theft protection.
Yeah, no, I appreciate the detail, Adam. We certainly work together a lot on security. I always love to hear stories of where Canada's actually leading the way in terms of technological innovation, especially around fraud and identity. So I'm happy there. I guess extending on to that a little bit, one of the areas, Adam, that you and I talk about often is government-issued ID verification and how that is used in the continued fight against fraud. Maybe I'll open this up to Mike, if that's okay. Mike, I know you've actually used some of this technology in the US for a large government agency. Do you have any thoughts on the efficacy or the importance of that in terms of identity and fraud?
Yeah, absolutely. I mean, if you think about your typical brick and mortar branch type of interaction, right? There's a person there. There's a document, right? And by document, I mean ID card, passport, driver's license. There's a government-issued document that someone had to jump through a number of barriers, in order to attain that document, assuming it's real. The technology that we're using looks at the front of the document. It looks at all of the fonts. It looks at all of the watermarks. It looks for known and unexpected differences in the document. It looks at the back of the document. It understands and can read the data, compare it. Ability to add in, a biometric, which is, basically taking a selfie with liveness, making sure that it matches the document. So what it really means is that you can have a higher level of assurance in a digital interaction. Even if you don't keep a copy of the the picture that was taken or anything like that, you've gone through the process and you've verified that yes, everything looks good, information's correct, you can move forward to the next process. And in some ways, it's easier than even filling out your information, right? So if you can grab the information from that document and use it as a pre-fill, that gives you another step forward. So, I think many of us as consumers, right, are very familiar with taking a picture of a credit card for a transaction or taking a picture. It becomes very easy to kind of go through that workflow. And, I think it's really the key way in a digital environment to really have that, high level of confidence.
Thanks, Mike. And I'd like to actually bring the audience in on this very question, actually, with another poll. And my question is, how would, specifically for like things we've heard about technology and ID, how would you rate the importance of new technology for fraud solutions specific to your organization? And I'll give the audience just a few minutes to respond. Perfect. So I think, again, fairly unanimous. They were fairly straightforward questions this time, I hope. The way I always think about this, it's almost a bit of an arms race. We have continuously evolving fraudsters. We need to make sure that our fraud and technology evolves at the same pace to make sure that we are protecting ourselves and, as we heard from Julie, protecting the consumers from fraud. That's the expectation they have of us. I think we likely have time for one more question to the panel. I'll throw this out to Adam or Mike, either one. From a technology and product perspective, what do businesses need to be thinking about in the next 18 to 24 months to deal with emerging trends? Where would you say the focus has to be today? Maybe, Adam, you could start with that, if that's okay.
Yeah, just two quick things. I think first, have a plan and start to do something. I think every business, their needs are a little bit different of what's most important to solve first. But all of your competitors are out there, especially in the wake of COVID, continuing to push the bounds on how they provide better digital experiences while doing it in a way that helps give greater protection against fraud. And there's solutions out there to help, and it's just, if you sit idle, you're going to look back in a few years and regret that.